While I will admit that I've only been half right about this housing crash so far, and by half right, I mean we have seen different markets across the country that have already crashed, you know? When you look at markets like Austin and San Francisco and Boise and Las Vegas, places like that where prices have come down substantially from their peak in 2022, that's basically a crash. Also, we can look at new construction homes that have seen home prices come down nearly 20% since their peak. Not quite 20% yet, but it's getting there. But of course, it hasn't happened on a wide scale yet across the entire country, and it definitely has not happened in all markets. And one thing that has happened that I can say I told you so about has been the affordability issues that new home buyers have been facing that is now leading them to have buyer's remorse. So many people think that, oh, I'm gonna buy a house, and once I get into the house, my expenses are gonna be fixed for life, because that's the myth that is continually perpetuated about buying your own home, that your payment's never gonna go up once you buy a house. Those stupid renters, they keep paying increases year after year, but us homeowners, we get to keep the same price for our entire term of the 30-year mortgage. Now, according to a new study, 58% of home buyers that purchased in 2020 have buyer's remorse. But if they purchased after 2020, that number shoots up to 68%. And even people who bought before the pandemic, pre-pandemic prices, okay? 54% of those folks say that they have buyer's remorse. Well, why would that be? Because those people got, you know, the deal of a lifetime according to everybody today. That's what the deal everybody would want to get, right? Pre-pandemic pricing, pre-pandemic interest rates. That sounds like a dream to any home buyer today. But yet 54% of those people regret their purchase. How come? Well, it turns out it's because of the things that I talk about here on the channel all the time. In fact, the average homeowner spends about $18,000 a year annually on expenses for the house, in addition to their house payment. And over a 30-year term, assuming you stay in the house for the 30-year mortgage term, that's an extra $538,740 over the 30-year life of that loan, in addition to your payments just to maintain the property. So about 36% of homeowners believe that owning their home has actually negatively affected their finances, with 23% of them stating that it's negatively impacted their mental health. That is not good, guys. Last time I checked, the American dream was not to be completely stressed out and going broke over owning your home. The whole point of it being a dream is because it's a scenario that you would love to end up in, not hate after it happens. And here's what these people with buyer's remorse say. Had they known the total cost ahead of time, 60% of respondents claim they would have made a different home buying decision. You guys see this house behind me? Just coincidentally, I remember that this house is linked to voter fraud here in Surfside, just so you know. They have a bunch of different people registered to vote that supposedly live at this house, but this house is vacant. You can see nobody lives in this house. It's all empty inside. And on top of that, the people that are claiming that they live there don't even live in Surfside. So talk about rigged elections, huh? Anyways, so here's what the top two things that people said they would have done differently if they would have known about the expenses to own a home, okay? They would have purchased a property that requires less maintenance, or they would have negotiated a better price with contingencies. And when they surveyed people who bought a home in 2023 or 2024, those people are way more likely to say they overpaid than those who bought before 2010. 46% say that they probably overpaid for the house if you bought it in the last year or so, versus 16% of people who bought before that. Which is also interesting because 2022 was actually the most expensive for real estate when it comes to peak pricing of the housing market. So about half of these people with buyer's remorse said that they're spending more money owning a home than they would have if they were renting, and 28% stated if they could do it all over, they would go back to renting. Nearly 2/3 of the respondents had regrets about their purchase, with 15% stating that their mortgage payments are too high and 13% saying that their interest rate is too high. And what have I been saying here on the channel, guys? I have been saying here for the past couple of years that when you buy a home, you're going to see, number one, your property taxes go up in most places. That's going to be a significant addition to your monthly payment that you're probably not aware of, or not expecting it to go up as much as it probably will go up by, due to these insane real estate evaluations. The price to maintain the property, you saw it for yourself, the average cost is $18,000 a year annually, okay? And that's just on average. If you live in a more expensive area, it's gonna be a lot more than that. This is why you see people taking out home equity loans and home equity lines of credit, because they need the money that the house is earning in appreciation just to pay for the house. That's what's happening.
Here we have a house for $1.425 million, but that is actually quite reduced from what they were originally asking back in October of 2023 of basically $1.6 million. So almost a $200,000 discount. House is still unsold, but it is pending. So it'll be interesting to see how much it actually sells for. And back in 2006, it sold for only $486,000. What a difference, huh? And their current property tax bill is only $5,000 a year because of that. But guess what? The new owner is going to have a property tax bill of about $30,000 to $40,000 a year.
So don't just take it from me, guys. Take it from your fellow Americans here that were surveyed who recently bought a home, saying that they regret their purchase. You know, take it from them on how much it costs to maintain the home, and if they could do it all over again, they would be renting instead. Especially with the difference right now. I'm telling you guys, I've been saying this a lot lately, but it makes perfect sense to be a renter right now with how much money you're saving. The cost difference between renting and owning in most places is so wide right now, you can save a tremendous amount of money being a renter. Some of the pushback I've received on that is people saying like, oh, well, you know, housing's unaffordable either way, whether you're renting or buying. Well, yeah, I guess, but the thing is, it's even more unaffordable if you're buying, guys. That's just common sense, okay? That's just how it maths out. But don't worry, help is on the way, because I saw another story talking about how here's 9 things that you can do if you're struggling to afford your home. Coincidentally, this is coming out right around the same time. So let's think about the thought process of how all this worked to begin with. Prices were going up, interest rates were going up, and everybody was saying, get a mad dash into this market before you can't afford it anymore. FOMO in, right? Buy that house. Just marry the house, date the rate, right? That's the advice everybody was given. Which is just a fancy lie to say that you'll be able to refinance when interest rates come down, assuming your house is still worth more than you paid for it. So the first thing they say to do if you are in trouble and cannot afford your house is to call your mortgage servicer. Many mortgage services have programs to help people avoid foreclosure. And they're gonna ask you, why are you unable to make the mortgage payment? Is this a permanent problem? Is it a temporary problem? They're gonna ask about your income, your expenses. They're gonna really dig into your financials to see, is this person for real? Are they defrauding us? They say you can also call a HUD-approved counseling agency to determine whether you qualify for any programs or additional help. They say you can also go into forbearance, which is something that we've already seen. I don't even know if mortgage services are still allowing people to go into forbearance or not, but that's what they're saying here. Maybe they still have these programs and they say, you know, usually it's up to 12 months. So you can just delay your mortgage payments for up to 12 months. But keep in mind, for anybody who does this, your interest payments don't get waived, guys. So you're just accumulating actually more debt by doing this. When you do a forbearance, your balance at the end of the forbearance is going to be higher than when you started it, because you're constantly being charged interest on that principal amount of the loan that's not going down. So keep that in mind. They say you can also refinance. Yeah, okay. Good luck with that one, guys. If you're somebody who bought recently and you're having a hard time affording your home, your chances of being able to refinance are extremely low, because chances are you're not going to have the equity. Usually they want to see at least 20% equity for you to refinance. People that just bought don't have that unless you put a 20% down payment and your market didn't go down.
Here we have a house that's been sitting on the market forever. They're asking $1.6 million currently, but they were asking anywhere between 1.3 and 1.5 all the way back as far as 2022. They've been trying to flip this house actually. And future tip for all you home buyers out there, when you see a house with a list this long, just think of it like dating. The longer the list, the higher the risk, okay? Anyways, their property tax bill is almost $20,000 a year, and they purchased this house for $1.2 million back in 2022. Been trying to flip it ever since with no luck.
One thing that you can do that will probably work is get a loan modification. Basically what they're doing is they'll probably extend your loan. Instead of you having a 30-year mortgage, maybe they'll give you a 40-year mortgage. and make your payments go down to make it more affordable for you. But obviously you're gonna be paying way more in interest over the life of that loan just because you can't afford it today. I think the next solution is the most practical one for most people who are facing home affordability issues, and that is to sell your home. They say that the average homeowner right now has about $300,000 in equity. This next solution I really don't like for people who are struggling financially. They say you can rent out your home. However, you're going to pay additional property taxes and increased insurance costs as a landlord because you're no longer going to have property tax protections in place. Like here in Florida, we have the homestead exemption, and I've shown you guys countless examples here in my videos of how much your property taxes jump when you don't have a homestead exemption. So the difference that you're going to pay in taxes plus the extra insurance for the extra liability as a rental is probably going to make it so that property does not actually produce positive cash flow. And for somebody who's struggling to pay the mortgage, that's the kiss of death. I would highly advise that anybody who is having trouble financially with the house to not rent it out, because you're just going to create more financial troubles. Your expenses will go up by a pretty wide margin, and if you have any trouble with the tenant or stop paying, or any trouble with the property in terms of unexpected repairs, that's going to be game over for you. Another thing you can do is a short sale. However, that only applies if you owe more than your house is worth, which could be the case for some people who bought over the past couple of years, depending on which market you live in right now. Whenever I think of that, I think of people who maybe bought in San Francisco or people who bought in Austin, Texas. Those would be the top two places that come to mind where you may actually qualify for a short sale today. And the last thing they say you can do is a deed in lieu of foreclosure. So instead of going through the whole foreclosure process, you essentially hand the keys back to your lender and they let you walk away. But you are going to take a pretty nasty hit on your credit from this. It's not as bad as an actual foreclosure, but it's not good. But I don't see why anybody would do this, especially if you have equity in the property. Sell it and get the money, guys. You don't go through foreclosure. Anybody who's going into foreclosure or short sale is upside down on that property and definitely owes more than the house is worth. It doesn't make any sense to go through either one of those right now if you have equity. Now, I came across the craziest story that you just wouldn't believe unless you heard it. And that is that, did you know that your house or your condo, whatever property you own, could actually be stolen for as little as $100? Yeah, that's right. I didn't know about this either until I read this, but apparently this is pretty popular here in Florida. Here's the worst part, guys. It's 100% legal. This is not, actually somebody stealing. It's not a squatter situation or anything like that. And this can happen anywhere, but this story is based out of Florida. Some attorneys have found basically loopholes in the court system that allows them, or somebody they know, some accomplice, some family member, to purchase foreclosure listings for as little as $100. And these people are evil because look at this. They typically target properties that are owned by estates of people who have died and whose mortgages were fully paid off, leaving no banks to complicate an otherwise simple proceeding, okay? And in some cases, owners or their heirs live in other countries, and the properties are often in foreclosure over unpaid condo assessments or fees. So really, this guy is doing this with condos the most, but it could happen in an HOA community as well, because if you have a house or a condo, townhouse, anything like that, something that requires an HOA fee, that's an additional liability that property has each month on top of the mortgage. And if there is no mortgage, then that's the only person you need to pay to other than the county for the property taxes each year. You can have somebody inherit a property and not know that they have to pay the HOA dues as well. The HOA can eventually foreclose on that property. And so this is the kind of place that this lawyer is targeting. So what they do is he pays off the condo debt in exchange for the right to try to recover that money through the foreclosure case. That gives him standing to join a case and request modifications to the foreclosure process. And basically the whole foreclosure process from there is rigged because he also gets a couple of things in his favor for paying off those unpaid dues, okay? They get on-site auctions, so no online foreclosure auction. If the winning bidder fails to pay on time, then this attorney or one of his associates can come in and buy the property for as little as $100. And the judge also allows them to get something called bidding credits. And This is basically when they can bid as high as they need to in order to win the auction, but they don't have to pay that amount. They're only required to pay the debt owed on the property and a little extra to cover the fees. So imagine you go to a foreclosure auction and the fair market value of the property is $300,000, right? Well, that gives this guy the right to bid up to $500,000, which nobody would pay because it's not worth that, but then actually only end up paying like maybe 40 grand for the place because they're just paying off, you know, some of the unpaid debts of the property, and that's it. They don't actually have to pay the 500 grand that they bid on. So it's cheating, you know, it's a legal version of cheating. And they're saying that due to this legal loophole and the fact that this guy's an attorney, over the past 10 years, him and his associates have been able to snap up about 20 properties here in Florida worth about $4.5 million. And typically they paid little more than the cost of the judgment associated with the foreclosure, which is a fraction of the property's value. So they're stealing real estate from people, essentially. They're targeting elderly, people that passed away, people that don't live here, and they're knowingly going in there and stealing these properties out from under the people that don't know what their rights are or don't know what's going on with their inheritance. And here's a real life example of how this actually played out, okay? There was a 2-bedroom condo in Pompano Beach, Florida. Basically, it sounds like he has people working with him to help do this in cahoots. So this lawyer's the one conducting the auction, okay? He's not actually the one bidding. And somebody shows up to bid on the property. The final bid was $185,000, okay? And the problem is the person that won the bid never paid the $185,000, which then gave this lawyer the right to go in there and buy the property for only $100 because he had previously paid off the liens and the unpaid association dues against this property. You can see how this scam works. They target condos, they target vacant places that are in foreclosure, usually due to unpaid condo fees. They go in there, pay the fees, and then, hey, I'm just the one conducting the auction here. And then somebody comes in and wins the bid. Okay, it doesn't matter what the price is because he has basically first dibs to buy it on the cheap if the person doesn't pay. So that person wins the bid, doesn't pay on purpose, and now this guy gets to swoop in and buy the place for $100. Do you guys think that's right? Do you think that's moral? Do you think that's how the system should work? Should loopholes like this exist? Let me know. Personally, I think it's horrible that stuff like this even exists and this is even possible. And clearly, it's just one person preying on another, guys. But somehow it's legal. I don't know. It's definitely a twisted world, that's for sure. Now, yesterday we kind of touched a little bit on commercial real estate towards the end of my video and how much in trouble it is. But here's the real stats, guys. In 2019, U.S. vacancy rates for commercial real estate was at 11%. Today, it's at 17%, which is higher than at any point that it ever was during the 2008 Great Financial Crisis. They're saying this is probably going to lead to a bunch of these commercial real estate buildings being sold off. Well, we're already seeing that happen right now because you're seeing buildings and properties go now for a fraction of what they sold for 10, 15 years ago, which is kind of unheard of. But my question is, who's going to come in here and buy up all these office buildings, and for what? You know, unless they're going to be repurposing them or demolishing them and building residential real estate or something of that matter, I can't understand the value in buying up these buildings, because one of the reasons that these buildings are worth so little is because tenants are not renewing their leases because they don't need the office space anymore. And the ones that do still want office space say that they need up to 40% less office space than they did pre-pandemic. So basically you have the demand for a commercial office space plummeting down to the floor, at the same time the vacancy level and the amount of it available skyrocketing. And as we know, real estate is a supply and demand game. This is crushing the values of these commercial buildings. I talked about a story that was sent to me the other day about how, because these office buildings create so much of the tax base and so much tax revenue for different localities, these localities, their plan to fix this is to just raise the taxes on the existing businesses and the existing tenants, guys. So how well do you think that's going to work out in the future when all these businesses have to raise their prices even more and contribute to even higher inflation to accommodate these higher taxes. You know, it's not going to work. What I think we're going to see is this collapse with commercial real estate is going to send ripple effects throughout the entire economy, especially the banking system, especially with businesses and how much they have to increase their prices to keep up with these extra taxes. And that's going to lead to more layoffs, meaning higher unemployment, meaning higher distress in our financial system, and more people that cannot afford to pay their bills. So that's where this is headed. You don't have to have a crystal ball to see it. So are we just making all this stuff up here? Am I just talking about negative biases that you guys just want to hear about? Or is this really happening? So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.